I'm particularly pleased with President Trump's support of my strategic Bitcoin reserve initiative, which will address our national debt while securing America's position as the global leader in financial innovation. We should be the global leader with this digital format that is going to be transformative of everyday economy and puts the everyday American, in fact, the everyday worker all over the world, in control of their own money.
So that was Senator Cynthia Lummis talking about the Bitcoin Act. Now, we've heard so much about this Bitcoin Act leading up to the election, since the election, how it's going to help solve the $36 trillion US debt. But the thing I liked the most about what I heard there was how it's going to give back control of people's finances, control of retail investors' finances, like you, like me. How often have you gone into a bank? You try to get some money out. They want to know, what do you want your own money for? They don't have it there. They don't have cash on hand to give it. Times are changing, and I'm happy I'm around for it. We've got a great show for you today. We're going to cover everything from around the crypto domain. We're going to cover the news, the indicators, the markets, and everything in between, all in just 10 minutes. Let's start with Bitcoin's push to 100K. So Bitcoin surged to 97K, threatens $3 billion worth of short positions. Now, they could be liquidated if the price hits 100K, and that would trigger a short squeeze and just increase market volatility. Now, on the other side of the coin, if the price drops down to $93,000, we could get a liquidation of $60 million of long positions. And then for some bullish sentiment, we could hit $130,000 if we push past that $115,000 mark. Again, though, in this market, always be really, really cautious out there, right? There is so much volatility. Okay, and next up we have Kraken. Now, they've reported a $472 million Q1 revenue number for 2025. Now, that's 19% up year on year, which is a huge amount of money, right? Now, a lot of that's been driven by a 29% surge in the volume that goes through. Obviously, exchanges, when we get a bull run, they make hay, right? Because there are so many transactions going through, so much volume. So you would have had that big run, that surge of Bitcoin, 35% surge at the very beginning of the year into January. That would have created so much volume for them and so much in the way of fees for them that would have been driving that massive 472 million number. Now, we also know that they're looking at expanding into stocks and ETFs through the acquisition of NinjaTrader. So they're just going to continue to expand. I mean, they're already one of the biggest exchanges, right, Kraken? I think they're one of the oldest as well, if not the oldest. They've been around for a very long time. So that sort of news of the volume and the expansion and that is really going to increase investor confidence in the markets, I believe, along with so many other things that we've been going through over the last week, right? We are seeing that fear and greed factor slowly go up, so we're getting a bit more greed in the market as well. I feel like more people probably now believe that the bull run isn't over than sit in the bull run over camp. What camp do you guys sit in? Comment below. Tell me if you're bullish or bearish. Okay, another bit of news. You've had Ivy League school, Brown University, invest $5 million in BlackRock's iShare ETFs. Now, they're the third university to do this. The other two universities are Emory, who invested $15.8 million. They invested that with Grayscale. And then the other one is University of Austin. Now, they invested $5 million, and they invested that with Unchained Capital. So we know these Ivy League schools have so much to invest. Now, this is only 3 of them. So it's just really another domino to fall to help in Bitcoin's legitimacy and also probably help drive the ETF flows, right? Because other Ivy League universities will definitely get in on this without a doubt. They're going to do it through ETFs. They're not going to go and buy and custody, like buy Bitcoin, hold their own cold wallets and custody it. They're going to do it through ETFs. So it will come through the ETF flows. And I know people are like, people shouldn't put the money in ETFs and whatever. They are necessary for this industry to get legitimacy and for this industry to grow. And this is a prime example of where they come into play. Now, other universities will definitely get on board and do the same sort of thing. So again, it's just another Another positive domino to fall that we've had lately. And now for some news out of the UK. They're looking at banning people buying crypto using credit cards or loans. So the UK FCA, which is the Financial Conduct Authority, so that's the UK's financial regulatory authority, if you like, they're looking at banning investors buying cryptocurrency using credit cards or using loans. Now, I'm not a big fan of governments telling everyone how they should live their life and what they can and what they can't do. On the flip side of that, you shouldn't be investing more than you can afford to lose in crypto. Like, if you're borrowing money to invest in crypto, it's not the best move you should be doing. Because if you borrowed money in 2021 at the peak of the market and you bought crypto and you got caught holding that bag through the bear market we've been going through for 3 years, one, you've gone through an emotional roller coaster, as everyone that runs through a whole cycle does. But two, the value of those assets that you bought dropped 90% or more in some cases, and some will never come back. And you're still paying for that loan. So be really, really, you can do whatever you want. You do you. I'm not here to tell you what to do. Be cautious is what I would say if you are borrowing money to buy crypto. Now, what they're saying, though, is they're saying 14% of crypto investors borrow money to buy crypto. Now, are they saying that? Now, I've worked in finance, okay? So I understand how you can make numbers say what you want them to say. Are they saying that 14% is the number of individuals? So of crypto investors, 14% of them have done that, which is what it reads as. Or are they saying the 14% of what's invested? Now, they're two very different things, right? Because I don't know the numbers, but, let's make up numbers. Let's say the top 10% of investors are responsible for 90% of the volume in crypto. All the whales doing millions and millions of dollars a day, they're responsible for most of the volume. The little guys might be doing, so these 14% may have done $1,000 transaction each. So I'd always like to, I'd like to know that other context behind it, right? Because I think they feel that it's going to, because I think they feel that this is going to reduce the speculative nature or the speculation on some of crypto. I don't know, again, without knowing the exact numbers of each of the buckets, it's hard to say how much it's going to impact the volume of some of these tokens where whales are involved anyway, and the price fluctuations. Okay, so let's take a quick look at the key market indicators. We can see fear and greed is down slightly, although still in the green, and has been for the last week. Last month we were in extreme fear, so that's how much we've seen a bit of a move in the sentiment. We can see Coinbase app has dropped slightly. Bitcoin dominance is still sitting around the same number, around 61, 62%. The total market cap is still at 3.1 trillion. Volume, 24-hour volume has dropped a bit to 73 billion now. We've got monthly returns are flat. Pi cycle, historic risk, both flat. The new pool, MVRVZ score, and the pure multiple are up slightly, but again, not materially. ETF flows for the 3rd of May were 674.9 million. And we've got top 5 tokens and coins, excluding the stables, are all sitting in the red today. If we then take a quick look at the market, we can see trending is Virtual's protocol. Again, it's been over the last few days. Vice is the top gainer at 151%. I don't know what token that is. I haven't looked into it. Bitcoin, pretty flat. As we go down, we'll look for any large moves. A lot of red today in the market, we can see. Not massively red, like we're not seeing 15 and 20% dumps, but it is a lot more red than it is green that we can see. Casper's green for the day, which is really, really good. They've got, I think it's on the 5th of May, they got that release. Trump's slightly up, 3.4. So yeah, not a lot of big moves. There's Virtuals at 8.1%. You can see it's quite a reasonable chart. It's been 68%, let's say, for the week for that one. Okay, that's it for today. Now, if you found this video useful, please do me a favor and give me a thumbs up. And for more, please consider subscribing. Click the bell notification so you're notified when I release my videos, and I'll see you in the next one.